All right, welcome back to the channel. Today we're going to be checking out CrowdStrike because they done messed up big time. So they pushed out a endpoint agent update to all of their endpoints, and they caused the largest worldwide IT outage in history. So yeah, that's something that I would advise against if you're in any type of software company. But yeah, especially for a cybersecurity firm that is like, hey, we're going to stop the bad guys. We're going to make sure your guys' systems are available and you're not going to have any like monetary loss because of like cyber attacks. By the way, my bad. We just took down like 8.5 million machines, stranded everybody at airports, and shut down the world for like a day. So yeah, not exactly what you want to do. I would advise against it. So initial reports, they sent out this update. It basically causes blue screen death to 8.5 million Windows machines, a lot of machines that were at airports, some servers, virtual and hardware environments. I think most of them are recovered, about 97%. Like it was massive, and this was a outage where you had to go and physically like reboot and recover the machines for a lot of these. So it was not an easy recovery at all. And then additionally, we're getting like reports that they're probably looking at about like 5.4. I've seen $5+ billion worth of like monetary damages to these companies. The other interesting thing is that this was not a cyber attack. So all these companies that have cyber attack insurance, well, what's going to happen? It wasn't a cyber attack. So are they going to go after CrowdStrike for, financial damages? If that happens, then CrowdStrike could be looking at, lawsuits in the billions of dollars plus area. So it's not exactly a good, not a good way to start out. So I don't know. We'll see what happens. The other thing that I've seen now is that Microsoft is also looking at taking away kernel level privileges for a lot of cybersecurity firms that have endpoint detection agents on machines. So they would no longer have kernel access to Windows machines, which means that so Mac did this like in 2020, I believe they were able to do it. Microsoft tried to do it in 2006 or 2008. Got a lot of pushback from the security community, security companies being like, no, we need that kernel level access to be able to detect like malicious things going on. So they're like, okay, you can have it. I think they're going to use this now to remove all of that kernel level access, which means, is CrowdStrike's product actually going to be any better than anyone else's? So I don't know. If they remove kernel access for a lot of these endpoint detection agents, it's going to change potentially the quality of the products, and they're going to have to adapt, and we'll see if they can adapt to be the same high quality player. But man, it's been a wild couple weeks. So I wanted to get a video out on this sooner, but you know what? Better late than never. So let's go over and let's go into the valuation template. Now, obviously, look at that beautiful drop. 380 to almost like 260, 256 right now. It's continuing to be pretty weak. And if we compare this to something like Palo Alto, I think has actually had pretty good reaction off of this. Yeah, they've been up a little bit, kind of fluctuating here or there. But on the first day that it actually happened, Palo Alto went up like 2%, I think. And they're probably going to be the main endpoint competitor for CrowdStrike. And I don't want to sound like I do not like CrowdStrike. I think CrowdStrike is great. I think they have a great product. They are the premium endpoint player in cybersecurity. I would love to, own them sometime. They are just very, very expensive, and they're priced at a very, very, very high multiple. They're priced to perfection. And when you're priced to perfection and then you take down 8.5 million machines and cause a worldwide global IT outage, and you're probably going to get re-rated. So this move, I believe, is totally justified. We can see, let's see, if we go to their previous kind of multiples, man, you can see they're trading at like around, what, a 1.6 free cash flow yield right now. So they've been expensive. They've been expensive for a while. And I think, I don't know, I never would have put that heavy of a premium on them. I think they are going to have moderating growth. I think that growth is probably the moderation of that growth could actually pick up now that we have this negative catalyst. It'll be very interesting to see how it affects their go forward, like, orders, right? Their new customer acquisitions. If they're going to be able to grow at the same rate, if they're going to have to make monetary discounts to current customers for causing them, millions of dollars in damages. I don't know. From the technical side, I would think this would be a pretty easy fix. Not even from like a testing perspective, but from a rollout perspective, I always thought how they rolled out their endpoint agent updates was really, really, really like risky. I mean, they basically do them all at once, as far as I'm aware. Comparing that to like Palo Alto, where you can do a controlled rollout. So hopefully they make improvements. They should easily be able to make improvements with their testing. Because for some reason their QA environment missed this bug, which makes me think they didn't even run it through a QA environment, because it was like pretty obvious. It was pretty much happening to any Windows machine. They should be able to improve their QA environment, and they should be able to pretty easily adapt better rollout procedures, staggered rollouts, things that you can do in a little bit more of a controlled environment. So if you do have a bug, you're maybe affecting, like a couple % of the total number of clients instead of, 8.5 million. So we'll see what happens there. I think the biggest thing is that the perception for CrowdStrike is going to be really, really bad for a while, and they can't F up anymore. They got to be rock solid. If they continue to F up, then, or if something else happens and just provides additional momentum to this negativity, we're probably going to see the market and just businesses in general, the industry, look at them as not the premier player that they are. And that could potentially lead to good investment opportunities. But the thing that we're going to have to look out for is that, if they do have they got about 3.7 billion cash on hand, but if they run into a whole bunch of lawsuits, what is going to be the monetary damage of that? I don't know. That's really hard to tell, but we can go through a quick down and dirty evaluation. And I haven't really done anything different. I'm going to change this to 17.5. And I think I've done a CrowdStrike evaluation on previous live streams. So this is, I think, my first dedicated video to CrowdStrike. But basically for CrowdStrike, I go off of a free cash flow only analysis, because the free cash flow has been the most consistent metric to go off of as far as like a reverse DCF, or how the market has been pricing them. And their free cash flow margins, as you can see, have been pretty dang stable for the last like 3 years or so. So what I'm assuming is that they're going to continue to go through like a top line growth of around, probably baseline is going to be about 20%, but best case scenario, about like 30%. Baseline would probably be about 20% for top line growth. I even with all this negativity, I have a hard time seeing them going lower than like 15%. So maybe I'll change this metric a little bit, do like -15. There we go. So we can do that. And so really you have a top line growth range of about 15 to 29%. And I'm assuming that their free cash flow margins are going to stay the same. So free cash flow would increase along with top line as long as they have margin maintenance. And I'm betting over the time we're going to see these net and EBIT margins are going to grow into their free cash flow margins a little bit better. So that's kind of what I'm going off of. The biggest thing is that CrowdStrike was for a long time priced at a really, really high multiple. Its 5-year average on a free cash flow yield was about 1.68% free cash flow yield. And I just think that's insane. I think it's really, 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 really high. So, but I don't know, bullish cases, or the very high cases, I'll give them like a, 1.17 to 7% free cash flow yield, but I really think they're probably more fairly priced in that 2.3 to 3%, with 4% being pretty dang low. And the only way that they would probably get priced to 4% free cash flow yield is if their growth was dropping off dramatically. So we'll see how this hits them. I'm changing the dilution. Instead of them doing a lot of the dilution, I'm changing that to basically where their buybacks would offset any of the dilution that they have through share-based compensation. So dilution is going to be pretty low. And then, yeah, that pretty much gives us fair value. And we have to really kind of look at 1 year fair value, because the current LTM metrics are going to be off of like net income and EBIT, but in 1 year I've adjusted everything just to go off of free cash flow. So 1 year fair value is like 116 in scenario 1 to 452 in scenario 5. I really think they probably deserve somewhere in this scenario 2, scenario 3 point, probably really scenario 3. But my spread is really wide because I just don't know how this is going to affect them. And if they do get a massive re-rating, it could hurt pretty dang bad. So 212 is really where I'm looking at for fair value right now. Then if I'm looking at getting a discount beyond that, with a 20% KGAR, I've got a scenario 1 buy price of $77, scenario 2 buy price of $114, scenario 3 of $174, scenario 4 of $280, and scenario 5 of $485. So we're kind of getting towards really my point of interest. I think it's right around that $200 mark. We're starting to get there. We have had a really good sell-off from about $390 to $250 right now, $258 right now. So we'll see if that downward momentum can continue into that $200 area. That is when I start to get a little bit more interested, but I still think it could take a couple quarters for this to play out. I don't know what lawsuits are going to come from this. I don't know, how it's going to affect their growth, if it's going to affect any billings that they're going to have to discount going forward. So their previous guidance might be, pulled back more if they're going to have to make concessions for the damages that they cause via lower product rates. Yeah, so it's wild. It is wild. They really, this is the worst thing that could have happened to them. The worst thing. And it's super unfortunate. It was one of the things that when I was researching them initially, I was like, this is really scary, because if they do any of these mass updates and they have any type of issues, this could be like a massive wide-scale outage. And I know they say oh, well, no, we're just updating the malware packages or whatever. It's not going to be that much. It's just a data update. But you never know. That's what I've learned working with, I don't know. In my job, I've had systems that, it's just a data update. It's not actually affecting anything of the application. It's fine. And then you update that data and, that data package, and then it triggers something, and then something else goes wrong. And then you have a way bigger issue than just, it's not a big deal. It's just a data package update. So yeah, I was always kind of skeptical of it. I think they'll be fine. I think it could be really painful for a while. I think it's going to take a while potentially for customers to gain trust in them again. I think they need to make the right changes to how they are proceeding and rolling out these updates. But I can definitely see myself, I'm going to be watching them closely because it's very high quality. I think it's probably the best endpoint detection company out there. They have really good SOC and really good response. Up until now, they've had really, really good customer satisfaction. So it is a very high quality company. It's extremely pricey. And right now, it's still probably priced for 30% growth right now. I would feel more comfortable buying this company when I think it's priced for around 20% growth, 15 to 20% growth. I think they'll be able to hit it. I did think that they'd be able to hit it. I don't know now. We'll see what the next next 1 or 2 reports are like. But yeah, that's what I got. Obviously, my revenue up and to the right. A little bit of a different video. I just kind of wanted to jump on, give you my thoughts on it, give you kind of what I'm looking for. I'm going to be watching them pretty closely, and we'll see if any good opportunities arise. It is a high quality company, really high quality company, great product that had a massive crack, and we'll see how much, I don't know, the market re-rates it based off of maybe the perception changing of it being super high quality to like, basically I think the market was saying nobody could touch them. Now I think we might see that shift to where the market might be like, if the industry goes, hey guys, maybe we shouldn't put all of our eggs in one basket. Maybe not only should we have maybe we should have like half of like our clients as a company. Maybe I should have half of my clients on CrowdStrike and half of my clients on like Cortex, Palo Alto, just to diversify that risk. I don't know. This could get interesting. So I'm super interested to see how this shakes out. But I hope you guys have had a great week, great weekend, and we will catch you in the next one. As always, I am not a financial advisor, and none of this is financial advice. This is just my musings on another company and another potential valuation. So I hope you enjoyed it. If you did, please hit the like and subscribe button, and we'll see you in the next one.